Following Donald Trump's embrace of Bitcoin, state governments are rushing to integrate the cryptocurrency into their investment strategies. Currently, 6 states have already introduced legislation that would allow for the allocation of up to 10% of public funds into Bitcoin. Wyoming Senator Cynthia Lummis introduced a bill that could give more momentum to this push. Her proposal calls for a strategic stockpile of Bitcoin to reach 1 million tokens, which would represent 5% of its total supply. 1. It's a hedge against inflation. After the presidential election and Donald Trump's embrace of Bitcoin, states are rushing to integrate the cryptocurrency into their public investment strategies. This movement has been fueled by calls for state-level strategic Bitcoin reserves, SBRs. This would require public pension funds and treasuries to invest a percentage of their assets into the cryptocurrency. These moves are intended to protect state investments from inflation and other economic crises. While many critics point out that Bitcoin is a volatile commodity, proponents argue that it could serve as an effective hedge against inflation. They also note that SBRs have been used to hold other commodities, such as gold and silver. Furthermore, they believe that increasing government buy-in will stabilize Bitcoin's future price swings and give the cryptocurrency more legitimacy. With legislative sessions getting underway, several states have already introduced bills aimed at establishing their own SBRs. The most prominent proposal comes from Wyoming Senator Cynthia Lummis, who has proposed a bill that would mandate the federal government stockpile 200,000 Bitcoin each year for 5 years. While these proposals are still in their early stages, they have generated momentum among longtime crypto advocates. The SBR push has the potential to change how we view digital currencies. It could even reshape the global economic order by allowing private investors to become more active in a domain traditionally dominated by sovereign currencies and national banks. As the debate continues to unfold, it's important to remember that a national strategic Bitcoin reserve will not happen without congressional approval. However, the momentum behind the movement may eventually lead to a Federal Reserve, despite the objections of some lawmakers. It will be interesting to watch how this movement plays out over the next few years. As more states figure out how to implement these proposals, it's possible that the momentum will accelerate and push the cryptocurrency to new heights. In the end, it's worth remembering that the original vision of Bitcoin was peer-to-peer electronic cash and freedom from censorship. The move toward a national Bitcoin reserve is far from that. Instead, it's a reflection of the growing power of private money in the world economy. 2. It's a way to save money. As Bitcoin continues to hit new highs, state lawmakers are looking at ways to get exposure to the popular digital asset. One way is to create a strategic reserve. These types of treasury holdings are typically designed to serve as a safeguard against economic instability and inflation. The concept of a reserve can be applied to a variety of assets, from stocks and bonds to commodities and even gold and silver. A strategic cryptocurrency reserve would allow states to invest in Bitcoin without having to buy the entire global supply, but this type of policy remains controversial. Moreover, it's unlikely that such an approach can be successful, at least not in the near term. Creating a strategic reserve requires state legislators to shift priorities, and that can be tough, especially when the legislature is already busy with pressing issues like school funding and fixing the electric grid. In addition, the fact that many states meet infrequently and for a short amount of time makes it difficult to put forward legislation related to novel technologies like cryptocurrency. While the idea of a strategic cryptocurrency reserve has gained momentum in some states, most are not ready to pass legislation related to this issue just yet. The best approach is to focus on creating educational opportunities for lawmakers and staff members to help them better understand the technology and its potential, according to Urban. The state of Pennsylvania is taking a step in this direction, with a bill proposed in November that would enable the state to allocate up to 10% of its general, emergency and state investment funds to Bitcoin. This could lead to the state acquiring roughly $1 billion worth of the digital currency, based on its current valuations. In addition, the Pennsylvania bill calls for any Bitcoin acquired to be held in cold storage, ensuring that it retains its value. Nevertheless, it's important to note that a strategic cryptocurrency reserve would not be a panacea for the nation's financial problems. To do that, the market capitalization of Bitcoin needs to skyrocket significantly, something that's not very likely to happen in the near future. It's a way to protect privacy. Many crypto advocates believe that a national Bitcoin reserve would boost the cryptocurrency's value. Others worry that it could lead to inflation and create an imbalance in the nation's budget. Regardless of the debate, state lawmakers are increasingly interested in incorporating Bitcoin into their financial reserves. The most popular proposal so far has come from Republican Senator Cynthia Lummis, who introduced the Bitcoin Act of 2024 last month. The bill would require the Treasury to buy 200,000 Bitcoin annually for 5 years, in an effort to amass 1 million coins. The move comes as part of a larger push to invest in digital assets, including stable coins and Ethereum. As of early March, lawmakers in at least 5 states have introduced bills to establish a strategic Bitcoin reserve, and many more are considering the idea. The goal is to diversify investment portfolios and embrace technological innovation. While some have criticized the plan as overly risky, others have welcomed it as a way to reduce the national debt and promote economic growth. The key difference between a strategic Bitcoin reserve and other forms of government funding is that the currency is not backed by any central authority, which means it has a much lower risk of inflation. However, critics have also raised concerns about the potential for political corruption and other risks associated with a state-backed cryptocurrency. In addition, experts warn that a Bitcoin reserve may drive up prices and exacerbate the digital asset bubble, which could hurt investors. While the idea of a national cryptocurrency reserve has generated excitement, it is unlikely to become a reality anytime soon. The Trump administration is still evaluating the merits of such a move, and there are several factors that could prevent it from happening. First, the process of setting up a cryptocurrency reserve takes a long time. Second, the federal government needs to find a trustworthy manager for the new reserve. Third, there are privacy concerns that must be addressed. Finally, there are legal issues that need to be resolved before the United States can consider a digital currency reserve. 4. It's a way to create jobs in a state that's a leader in attracting cryptocurrency companies. It makes sense that North Carolina would want to invest some of its taxpayer funds into the industry. However, lawmakers are still struggling with how to do that while creating a fair and balanced environment for crypto investors. That's why Senator Cynthia Lummis, a Republican who devotes most of her political bandwidth to the blockchain sector, has proposed that the federal government establish a strategic Bitcoin reserve. A bill to do so has garnered the support of over 20 lawmakers. The bill's supporters say it would help the US diversify its holdings, protect against financial risk and promote the cryptocurrency as a legitimate global asset. The concept of a national stockpile of digital assets has turned into something of a movement since President Trump made it clear that he supports the idea. As a result, many state governments are considering pushing portions of their public investment portfolios into digital currencies. That means that retired school teachers, police officers and other state employees could see their retirement savings tied to the volatility of the crypto markets. Florida has already started making moves toward a state-backed Bitcoin reserve, as lawmakers have introduced legislation that would allow the state treasury to buy and hold digital assets. Other states, including Arizona, Massachusetts and Wyoming, have also considered similar proposals. The push for a strategic Bitcoin reserve is just the latest development in what's been a landmark year for cryptocurrency. Investors are seeing record highs. Exchange-traded funds that hold cryptocurrencies have been approved by the SEC, and a new wave of startups is building blockchain infrastructure to support the growing industry. If the federal government decides to create a strategic Bitcoin reserve, it could be a game changer for the space, as it would legitimize the asset in the eyes of people who don't yet think it's trustworthy. But that's only if the federal government understands the fundamentals of the cryptocurrency and can make smart investments. And that may be a long way off. In the meantime, analysts expect to see more states pass bills aimed at becoming more crypto-friendly as they watch crypto investors swell into a powerful lobby. Bitcoin miners expand their operations and venture capital firms underwrite an emerging ecosystem that serves crypto.